confidence is back in the overall financial system, money will start flowing once again towards India. As a result of which, many private equity players are lining up. Some of them have already invested in India. One such example is Eton, which is invested in the Reliance Group, owned by Anil Dhirubhai Ambani, in the financial services, says they are bullish on India, and this is just the beginning of the party they've been waiting for to unfold in the Indian markets, because as an emerging economy, India does offer them long-term investment and long-term returns.
Well, we view it as an opportunity to make investments at a low point in the cycle. We're very long-term oriented, and to the extent that you can, capitalize on opportunities today when the world is short of capital, yet the needs for capital in places like India and other parts of the world are so great, there are opportunities to make excellent returns over time if you can have a very long-term focus, which we do.
When you say you have a long-term focus, what took you so long? Your investments in India, except for Reliance, are not very well known, and I doubt if there are any other big investments of that size. How do you view the Indian market as of today?
But we look at things on a very long-term basis, and on that basis we're enthusiastic about the India story. There are terrific growth opportunities in terms of the market that we all know, growth of domestic consumption and the opportunities there. At the same time, India has some of the best entrepreneurs in the world at a time when the value to entrepreneurialism is so high. So the opportunity to allocate capital to entrepreneurs in a real dynamic and growing market is a terrific opportunity that we intend to exploit even more in the future.
Eric, that would also mean that companies like yours and other private equity players, there is still enough money. There is no fear that because of the credit squeeze, everything getting blocked up, choked up, the flow of money is going to dry out and may not flow at all to any markets.
Well, there's no question that there's less capital available than there was before, and the cost of that capital is much higher than it had been. An investment in India has to compete with an investment in Brazil, an investment in Europe, an investment in the United States, equity investments, credit investments, the like. We've seen the price of instruments all over the world fall dramatically, which means that when senior secured bank debt in the United States trades for a mid-teens return in dollars, it means that really sets a new benchmark, and everything has got to reprice to that. So when the private markets reprice to that in India and everywhere else in the world, capital will start to flow more.
Do you think back home in the US, though, there is still a lot of fear that what's the point of allocating money in emerging markets, given the fact that we have to set the house in order first in the backdrop of the Obama package? How do you see things turning out in the US itself in the first place?
I think the U.S. is going to be going through a painful period of adjustment that we all know. The time will be either, measured in months or years, depending upon how effective the government programs are and how effective they are at restoring confidence. My own sense is that it's going to take some period of time for that to happen, but I don't think that precludes U.S. and Western investors from making investments in emerging markets and making investments in India. They're really very different stories. Now, there is less capital available for all those reasons. The price of that's higher, but I think that international investors are still very much looking forward to making those investments if they can do it at the right price.
Coming back to India very quickly, the kind of investment that you have made, you obviously identified financial services as one big theme for you. Is it normal for Eton Park to work on that theme as a general observation?
Yep, we're interested in financial services. We also like areas in the power and infrastructure sector, and there are a number of opportunities in India for that. Basically, we're believers in the intermediate-term growth story for India. Some of that is the growth in financial services. Some of that is the growth in the infrastructure that's required to build up all the services in India. So there are a number of themes that we like, just those are two.
Would it be fair to say your investments in India has just begun?
I hope so. I think so, yes. I mean, we're very optimistic. We've devoted a lot of resources there. We've devoted a lot of time there, and we're looking forward to spending more.
In terms of the way the stock markets have performed, did that surprise you, disappoint you? Because you must have come on a higher valuation level, and now obviously looking at every stock, not just in which you would have invested, related companies of that group, everything is down. Did that surprise you or shock you, or was it normal?
Well, I mean, I guess I'd say that volatility is to be expected in markets. Volatility in emerging markets is certainly to be expected. Did we think that there could be adjustments of this magnitude over the course of an investment in India? For sure. Did I think it was going to happen at this moment in that magnitude? No. But I wouldn't say that what's happened undermines the investment case for India in the intermediate to long term. So, you really need to get your time horizon appropriate. And the market rallied a lot. In the earlier time period, fell after here. You kind of have to take it all with good perspective.
Has it helped to put the promoter expectation on a more ground level, realistic levels, given the way the markets have performed for private equity players like?
Look, I think everywhere in the world, there's still a disconnect between the price that sellers would like to achieve and the price that buyers want to pay. Assets haven't traded in the United States. Banks haven't sold assets. Very few private equity investments have been done anywhere in the world. And at some point, those two lines will cross, either because confidence returns to investors and they can pay higher prices, or the sellers realize that they need capital for whatever projects they're going to do and their price expectations come down. That hasn't happened anywhere in the world very much, and so I'm not surprised that India still has that too.
But are you finding that bit of a problem for putting fresh investments? Promoters are still sticking on to their view of the business?
I wouldn't say it's a problem. I'm delighted that entrepreneurs are so enthusiastic about their futures. I suspect that they're probably right. At the same time, you need to compare it with all sorts of other investments in the world, so they may not be wrong to want to demand higher prices, but investors may not be wrong to demand lower prices, and something's going to have to happen to bridge that gap, and I suspect that it will.
One quick question. I shared a joke with you, which is doing the rounds at Davos. It's not about return on equity, but return of equity. What kind of returns would Eton Park be satisfied with when it comes to India?
Well, I wouldn't say that we have a numerical return hurdle. What I would say is that you need to have very strong risk-adjusted returns. Certainly, numbers well in the double digits. Certainly, when senior secured bank debt in dollars can yield you a mid-teens type of return, to invest in equity must be much higher than that. To invest in India must be higher still.
25 plus is normal to assume. 25 plus is normal to assume.
I wouldn't put a number on it, but I would say certainly a high number. And my guess is that, but my guess is that the growth prospects of India are such that there are transactions that can be done that will make sense for the sellers and make sense for the buyers because of the return that capital can really yield in their investments.
One final question. The way everybody's talking about recession, now depression, do you think the real economy is going to take much longer than the way financial whiz kids will be able to figure out how to deploy cash?
The real economy operates with a lag. There are all sorts of things that are kind of baked in the cake. Projects that have been canceled, contracts that aren't going to wind up, kind of being fulfilled in the end, that are multi-year contracts. That leads to a contraction of employment. That contraction of employment leads to a contraction of spending. And we're still in the early to mid stages of all that. So the markets may well recover before the real economy does. But I think there's a lot of real economic contraction that's to come. Yeah.
What's the worst that you're expecting or fearing right now? Or are we over it?
No, I don't think we're over it. But I would say everything's about probabilities. I mean, there's certainly some probability of a very bad outcome. That's not our central case. But you need to organize your investments and organize your portfolio to be able to withstand that, even if that's not your most likely outcome.
And your investors are still pumping in money into Eton?
We've got a good relationship with all of our different stakeholders, and we're optimistic, yeah.